Hi there, good afternoon, and you've tuned in to ETNOW, and this is Markets at Noon with me, Sheryl, and I have with me Ajay Sharma. Very good afternoon to you, Ajay.
Afternoon, Sheryl. Happy Women's Day to you.
Thank you so much. And it's special Women's Day, I must say.
Yes,
I've got an opportunity to anchor with you, Markets at Noon.
Well, but our viewers must know that ETNOW is a team which is powered by women. Many of them they get to interact with on the channel, but there are 90% of them who are tirelessly working behind the scenes to make ETNOW the brand, the influential brand it is. But we'll take it forward. The Mr. Market right now is doing very interesting moves. In fact, last 2 days I would say there was a kind of a shakeout, especially in the mid cap and the small cap end of the market, and a lot of people got they actually kind of stepped down from the train, and then the market took off. Not only the 22,500 mark on the Nifty, Bank Nifty has done very well. It's the small cap, mid cap, and my producer has fired the 7-day graph for the small cap, mid cap. That's a story for you. The last 7 days have been particularly rough for the small cap and the mid cap end of the market. But now, if you could fire the small cap, mid cap intraday, just to understand that things are off lows. So that's my first question to Rahul Sharma, Director and Technical Head Derivatives at JM Fin. Rahul, I must say that you have caught the market moves, the swings of the market last few months very nicely, and we are at 22,500 now. This shakeout which the broader market saw for the last 1 week, 10 days, do you think it's over now, or the texture of the market would remain tilted toward large caps at least for the full series?
Thanks, Ajay. So shakeouts are good, and that is exactly what we've seen happening in this consolidation. So the texture of the market is still buy on dips, is still positive. On one side, we have Nifty, which is broken out from this consolidation that we had from last 8 to 9 weeks, and Nifty now seems to be heading towards higher highs. Possibly 23,000 is very much on the cards for the Nifty. And as far as the pain point of the market, which was so far had been Bank Nifty, that has also come out of the rut that it was in and seems ready to head towards the 50,000 mark. So clearly the large caps are the ones which are leading after this consolidation, and mid and small caps may come back into the party once large caps are done with. So my sense is this bull market is very much on. Individual stocks may witness correction because there was definitely a lot of euphoria and over optimism in especially in small caps. So there we are seeing pullbacks happening. But my sense is once the large caps are done with, the second leg of the rally could very well spill over to the mid and small caps, which is where we might see another rally happening possibly in the month of April and ahead. So both Nifty, Bank Nifty look pretty solid to me on the charts, and there is more upside to be had in the coming few weeks.
Well explained, Rahul, I must say. Rahul, I would like to understand the charts of 4 stocks from you, because there have been big block deals which have happened in today's session in these 4, and typically whenever there is a big block deal, the interest for HNI and retail comes in. First is Bharti, Macrotech, Zomato and SBFC, which is down 8%. You can start with Bharti, 1200.
In fact, technically, crossed its previous high and with very good momentum. And my sense is the trend definitely should favor the bulls going ahead from here. So the trend remains very much positive. We should very well be headed towards 1250, 1280 in the short term in Bharti Airtel. And on the charts, the stock looks pretty solid, especially after the 50-20 days consolidation that we had. As far as the other names are concerned, something like the macro tech like Loda is also is in a sector which is primarily doing very well, which is the real estate space. And this stock is also a very similar setup, 15-20 day of consolidation. Then a trigger comes in and the follow buying takes up the stock higher. So in fact, most of the names that we've discussed look like these are ideal candidates. Especially after the recent time correction that we've seen, we should see momentum moves happening in these names.
Very good afternoon, Sheryl, also joining the conversation. Also, along with the list of the names that actually Ajay mentioned, you had M&M also block deal taking place in that particular counter. You've seen the stock actually under pressure. And what's your view coming in on the entire auto pack as well? Where do you see this one headed going ahead, be the two-wheeler measures or the four-wheeler counters?
So auto index has been doing fairly well, although of late the momentum slowed down a bit, but still there are no signs of a price breakdown in the auto index. And as far as M&M is concerned, the stock has been in a primary uptrend. In fact, the current correction is a good buying opportunity, I would say. Maybe one can look to accumulate in the next 50 to 60 point range on the downside. We are trading very close to the 20-day moving average. Maybe around 1850, the risk reward becomes favorable again for longs. And on the way up, we could very well see the stock head towards the 2000 mark. So my sense is there is no problem in this sectoral index as such. And after today's block deal, especially after the prices eventually showing a bit of a pause and a correction, I think it's an ideal buy on dip candidate somewhere maybe around 50 rupees low. One can look to buy with a stop loss of 1800 and a possible 10% upside can be had in about a couple of weeks' time.
IFL Finance, that particular stock, got very good rebound in today's session after two kind of 20% down circuits. Is it a good time to get in even now?
Sorry, I couldn't get the stock name.
IFL Finance.
Yeah, so we've seen time and again stocks like taking a beating, and the recovery has been pretty fast. My sense is probably let the volatility settle a bit. At this point in time, the risk reward isn't really great. It's more like 1:1. So probably after a bit of a time correction, we'll look to get into it. So at this point in time, one can look to avoid. Maybe there are some better names in the in the space which can be looked upon. Like IT is one sector which is turning around after this correction. In fact, Wipro is something that we like in particular, which can do well from current levels. The entire IT pack looks good. Wipro looks good specifically for a target of 550, 580 on the upside, and positionally can be bought with a stop loss of 500 on the closing basis.
All right, then. Thank you so much, Rahul, for joining us on the show, giving us your take on the markets where you see Nifty actually headed towards 23,000 pretty soon in the near term as well, and giving your outlook on the large cap counters. That was Rahul Sharma sharing his view on the markets. But Ajay, all that sparkles, all that blinks is not just gold today, which has hit record high levels on the spot prices, but it's also the metal counters, be it JSW Steel, be it Tata Steel, all of them are shining bright. And I believe we have Ashisha to tell us why is that. Ashisha?
Yes, we have a very positive report that has come in from JP Morgan this morning, where they have resumed coverage on the metal counter. First up, let's talk about the ferrous space, where they say that Indian companies are generating a higher growth rate as compared to several other global companies in the steel space. They've also given their target price. First up, let's talk about Tata Steel, where they've given an overweight rating with a target price of 170. For JSW Steel, overweight rating with a target price of 980. They believe that lower cost companies could enjoy market share gains and margin expansion going forward, and that demand could outpace supply as far as the ferrous space is concerned. Let's talk about the non-ferrous space and in particular Hindalco, where they have given an overweight rating with a target price of 600. They believe margins could expand for Hindalco across the board, both for Novelis as well as Hindalco's India operations, and they believe that capex expansion plan, especially the recent Bay Millet expansion, is a multi-decadal opportunity for the company. Moving on to NMDC then, and they are not bullish on this counter. They have an underweight rating on the stock with a target price of 195. They believe that the risk reward is unfavorable at the moment. Earnings could be revised downwards, and that iron ore prices are also expected to decline in FY25 and 26. Vedanta neutral rating with a target of 280. Coal India also neutral rating with a target of 480. And they say that we should approach the sector with a positive bias, and every dip should be a buying opportunity. So very positive report that has come in from JP Morgan, and we have the metal counter in focus today.
All right, thank you so much for that, Ashisha, for outlining why the metals are shining bright in trade today. But on that note, we'll slip into a break.